Hello friends, welcome to this video. So if you invest in our 14 profitable strategies video course, what will you get? So we'll discuss this in this video. So you'll get, if you invest in this video course, you'll get 14 profitable strategies which work in the real market. I have shared the rules of the strategy and the backtest results, and all the strategies are systematic, rule based. There is no discretion allowed. There are rules for entry, exit, stop loss, target, and where to adjust, what to adjust, or whether to adjust or not. Everything is fixed. Nothing is on discretion. So our monkey mind will not come in between. And for every strategy, I have shared the backtest results in this video course, how it has performed over the past few years. So everything I've shared, all the strategies, and most of them I use, and they're doing pretty well. So I will discuss each and every strategy in short, so that you can get an idea what you will get in this video course. So let's bring it on and let's start. So I will share my screen with you. So I think, okay. So this is my screen here. Here it is written 14 profitable trading strategies. So this is the video course. And when you click on this, you'll get this page. So here, as you can see here, there are many videos. There are total 15 videos, 15 videos, and there are 14 profitable strategies. So I will share one by one in brief, very shortly, so that you can get an idea. As you can see here, the videos are 33 minutes, 20 minutes, on an average 15 to 20 minutes videos are there, in which I've explained all the things of the strategy, entry, exit, backtest results. So we'll see in brief. The first strategy is rule-based short straddle intraday bank Nifty. As the name suggests, it is very much clear that it is a short straddle. That means we sell at the money call and put. Okay, it is an intraday strategy. We can use it daily. It's not positional, and we can use it in bank Nifty. Okay, so from the name itself, it's very clear. And there are entry rules. The timing is fixed where we enter. The timing is fixed where we exit. Stop loss is also fixed. Stop loss is also fixed. It's a percentage stop loss on each leg. So no need of any algo. No need to invest in any algo. Per leg stop loss is there percentage wise. You can put it in the system, and no need of any adjustments. There is no need of any adjustments. So even if you are a working person, if you work in an office, you can just place the orders, put the stop loss, and leave it as it is. No need to see it. You can see it after the exit. Okay, how it has performed. So for working people, it's very much beneficial. They can also use it. This is the strategy. I cannot go in the detail. That for that you will have to invest in this strategy video course. Okay, I will just click here and see the snippets, the short clips of this video, so that you can get a better idea what is in the video. So I'll click here. This is the video. As you can see here, so I think you might not have been you are not able to hear this, but I will explain what I have told here. That for any system to work, systems work, people fail. For any system to work, you have to go with the system for a long time. For at least 3 months, you have to go with it. This is the one thing. And the second thing is you have to follow the rules. Follow the rules of the system. Okay, drawdown phases will come where you will go through many losses. Okay, but if you change your system in between, if you do system hopping there, then you will not be able to see the result of the system, profits of the system. Okay, in the drawdowns, we have to be with the system, at least do it for minimum do it for 3 months to see the results for yourself, and follow the rules, follow the exact rules of the system. Then only you will be able to see the result of the profitable strategy. Okay, so uh, this is about it. I cannot go in detail. So this is the first strategy. Now we'll move on to the next one, which is Thursday expiry special, which is Thursday expiry special. So we do it on, it's a intraday strategy which we deploy on Thursdays, which is the expiry day of our index, Nifty, Bank Nifty. So we deploy it in Bank Nifty on Thursdays, which is the expiry day, weekly expiry, and it gives a very good results on Thursdays. So it's again a system-based strategy, no need of any adjustments. Office working people can also use it, and you have to just place the orders, put the stop loss, and just leave it. Okay, so it gives very good results on Thursdays. And again, the entry rules are fixed, exit rules are fixed, stop loss, target. Okay, no need of any adjustments. Just place the orders, place the stop loss, and leave it. So drawdowns will also come, but if you if you keep on implementing this for a longer period of time, you will definitely see the results. So this is about the Thursday expiry special, and it will definitely help you in getting good results if you, again, same two things, follow the rules and use it or implement it for minimum 3 months. If you do these two things, you will definitely see good results from this strategy. Okay, I cannot go in detail here, that you will have to invest in this strategy. Okay, this is the second one. Third one is our morning intraday bank nifty. Here, as the name suggests, we use it in the morning. For the morning 30 minutes, bank nifty is very much volatile. Every stock or index is volatile in the first 30 minutes, and we will take advantage of that only. The system is designed in such a way that it takes advantage of the early morning volatility, the market. Okay, here also, this also intraday strategy. We use it in bank nifty, and we enter at 9:16 and we exit at 9:40. 9:40 we exit. So 25 minutes duration we do the exit, or if the stop loss is hit in between, then we can exit before that also. So again, rule based, every strategy I will share will be rule based, systematic, no discretion allowed, because I have understood from more than 5 years of experience in share market that discretionary trading is the most difficult trading, and it has the least probability of being profitable. So I'm not saying that there are no discretionary profitable traders. There are many, but systematic trading, if you are a beginner, if you are a newbie, when you are starting, systematic trading is the best way to start, to gain experience, to see what can happen, what are the possibilities. Okay, because everything is rule based. You don't do anything which comes in your mind. Okay, so better to start with systematic, see the results, then do your experiments, and then you can test different things. But I would suggest you all to start with systematic trading, rule-based trading in the beginning. It will definitely help you. And all the studies I've shared here, all are systematic, rule-based, and no need of any discussion. And there are not many adjustments also. So even if you're a working person, even if you have a job, office job, then also you can implement them easily and get good results. Okay, so this I will click here, morning intraday bank nifty. So I cannot share much more because it will become very obvious. So this is it. I will move on to the next one, which is a straddle and strangle. So I will tell you, I have shared the backtest results of all the strategies also, so that you can get a confidence in the strategy. And whichever style suits you, you can implement that strategy. Okay. Next is the straddle and strangle in Bank Nifty intraday. Again, see, most of the strategies are intraday. The top 5 to 6 are intraday strategies. Mostly we use in Bank Nifty. Okay, and mostly are intraday. So this is also intraday Bank Nifty strategy. Straddle and strangle we do. At the money call put we sell, and 500 points away put and 500 points away call. That also will sell. That will become a strangle. Okay. So here also rules are fixed. Intraday strategy, so we use stop loss, and we have exit time, we have entry time, and not many adjustments are there. You will know when you see this video. Okay, so this is our straddle plus strangle, straddle plus strangle strategy. So I have shared the backtest result of 1 year, and it gives good returns. I have also considered the brokerage, slippage, everything in the backtest. Uh, what profit can we expect after cutting brokerage, slippage, and all the charges which we have to pay as a trader? So that will give you a realistic view of what is possible if you use this strategy in live market. So this is another one, and the next is our directional spread, which is intraday. Okay, directional spread intraday strategy. So here what we do, again an intraday strategy, and as the name suggests, it's a directional. Till now we were dealing with straddles, strangles, which are in non-directional strategies, but here I am telling directional. So directional we can go with spreads. So it can be spread, can be credit spread or debit spread. Okay, it depends on the market conditions. I've explained this in the video, when to deploy credit spread, when to deploy debit spread, and how to know the direction, how to know the trend. So everything I've discussed in this video. So uh, as the name suggests, it's a directional strategy. If I think that the market can go up according to price action, if I see that the market can go up, I can either do a put credit spread or a call debit spread. So mostly I prefer a credit spread in intraday, because with time is also with us, because with the time, even if the market does not go up, even if it stays at that place also, then also we can get the benefit of theta, because the premiums will decay with time. Okay, so that's the benefit. So basic idea is the same. Idea is, first we should know the what is the trend. Suppose the trend is up. From the price action we have known that the trend is up. So what we will do is, we will do put credit spread. That also, which strikes to select, that is also important. We cannot go at the money because it's very much volatile. So we'll maintain some distance from at the money. We'll select few strikes away, so that even if market reverses, we don't panic. And one more advantage of this strategy is that we stop loss hunting is avoided. Stop loss hunting is avoided because we don't have any stop loss intraday, because we have an hedge. Even if market makes spikes, so spikes we can escape from the spikes, we can escape from stop loss hunting, which is regularly happening nowadays in intraday. Okay, so this strategy is very much useful. And one more advantage is that even if you have less capital, say 30,000 rupees, for doing straddles we need minimum 1.5 lakhs or 2 lakhs rupees, one lot. But for doing spreads, directional spreads, minimum 30,000 also is sufficient if you do one lot directional spreads in Nifty or Bank Nifty. Okay, so this is one more advantage if you go directional with spreads in intraday index. Okay, so this is one more other advantage. So advantages are that even if you have less capital, say minimum 30,000 also, you can do it with one lot directional. One more is you will avoid stop loss hunting, and one more is uh, yes, less capital is required. Less capital is required here. Okay, so this and all the entries, where to enter, where to exit, and the backtest results also I've shared in the video. So moving on to the next strategy, which is our straddle positional. Now we are moving to positional strategies. Till now we are discussing about the intraday strategies. So I have some positional strategies also for you. Straddle positional, Bank Nifty weekly expiry. So what we do here is we will as the name says, it's a straddle. Again, we are doing straddle and positional. Okay, this is a positional in Bank Nifty on weekly expiry, not on monthly expiry. So what we do here is, I will give you a brief idea. What we do here is on Tuesday or Monday or Tuesday, what we do is not the current expiry, the next expiry. What we do is we sell call and put. We sell call and put. Basically, we do short straddle on Monday day end for the next expiry. So premiums will be high. Premiums will be high. We can get around combined premium around 1,000 rupees. 1,000 rupees can be there. So 1,000 or 1,200 rupees we can get. So I will just write also at the same time. Okay, so I will just write also so that you can get an idea. Color. Okay, white. Okay, I don't need this. I need drawing. Okay, I'll change the color now, white. Okay, so now it's visible. What we do here is on Monday day end, what we do is we do straddle on next expiry. On next expiry. Okay. The premiums, combined premiums will be around 1,000 to 1,200 rupees. Okay. So this much range we are getting. And what we do is we put combined stop loss. We put combined stop loss. So how can we do it? So suppose say we get 1,000 rupees premium. One call is at 600 and put is at 400 and this is at 600. Okay. So what will we do here is combined premium is 1,000. So we'll put a stop loss of 20%, say. So if the combined premium goes to 1,200, we'll exit. We'll exit both. No adjustments. So this is the exit criteria. So Monday end we have made this. Our exit criteria is simple. If the combined premium reaches about 1,200, we will exit. And if it doesn't, see what happens is the benefit of getting more premium is that with time, the premiums will decay. And even if market goes one side also, then also this premium will decay. Suppose this goes to 500, this goes to 500. Still, premium is 1,000 rupees only. Okay, but the Bank Nifty has moved, say 300 points up. Still, our premium is same, combined premium. So we don't have to panic. This is because of the time decay. Okay, so this is the thing. And with the time what will happen is both will start giving profits. Okay, And if combined premium reaches above 1200, we will exit both of them. We will exit both of them. So this is the strategy. The exact details I have explained in this video. So, and maximum we can exit on the next Monday before end. Next Monday before end. So for every week, for duration is around 1 week. And one more thing is, if we get 50% of the premium, if we get 50 to 60% of the premium in say 4 to 5 days, we will exit, because we are getting 1,000 rupees premium. And if I get a profit of say 500 points, then I can think of exiting also, because this way I will be safe and I will keep booking my profits. Okay, so the exact details I've shared in this uh, video. I hope you understood it. Now moving on to the next one, which is this. Okay, okay, this is not. We'll change the color. Okay. Green overtakes red near 20 moving average. Okay, so as the name suggests, it is simple. Suppose this is the 20 moving average, and this is the 20 moving average, and these are the candles which are forming. This is a candle which are forming, and this again a red candle is formed. Again a red candle is formed, and here what happens is this candle forms like this. So price went up, it came down, and a red candle, when a green candle overtakes a red candle near 20 moving average, then what we'll do, we'll buy above this. Stop loss can be below the entry candle, and we will go for it. So basically this is the thing, the time frame which we use, and the exact details I've discussed in this video, which is of 15 minutes, I think more than 15 minutes. Okay, so this is the things. These are the various observations which I have made in my more than 5 years of experience, and I have noticed that there are many patterns which you keep on repeating again and again. Okay, so if we can exploit them to our benefit, that is what we want. That is how we can profit from trading. Okay, so this is the thing, green overtakes red near 20 moving average. This is the name of the strategy, and the exact details, how to enter, what risk reward we can take, what target we can expect, where to put stop loss, which time frame which we should use, where to use it in equity cash or futures or options or index or stocks or currencies or commodities, where to use. I have explained everything in this inside of this video course. So moving on to the next one, which is 5 profitable price action patterns. Now you can see here is an 88-minute video. Okay, so 88-minute video means almost 1.5 hours. Now this is a long video. It's a long video. I have explained everything in detail. I have explained 5 profitable price action patterns. As I said just now, that there are many patterns which keep on repeating. Price action patterns are there, candlestick patterns are there, which keep on repeating again and again. So the top 5, which I think are the most beneficial, which can help us, I've discussed in this video. It's a very exhaustive video, long video, and if you go through it, it will definitely help you in your price action trading, and also can help you make a good profit from trading. You can use it in cash market, you can use it in futures, options, commodities, currencies, anywhere. And time frame also, it works on every time frame. This means that it is universal. This strategy are universal. You can use it anywhere on any time frame, on any type of market, either cash, futures, commodities, currencies, or index stocks, options. So these are the 5 price action patterns which I've discussed in here. Moving on to the next one. Uh, Moving on to the next one. This is limit order option selling. Limit order option selling. So basically, I will be doing option selling. Okay, and this will do on intraday, on index. Okay, so limit order. What we'll do here is suppose what happens is everyone knows that option selling has an edge. It has an edge because time is with us. Time decay will definitely help us. Even if we are wrong, then also we can exit. So the other part is that it is risky, that if I sell 10 rupees premium, it can go to 100, 200, 500, 400, 1000. Okay. So how to tackle this? We can put a stop loss. Suppose I sell at 10, I can put a stop loss around 15 to 20, so that I can get 10 rupees only. I will not lose more than 10 rupees on this. Okay. One more thing we can do here is if I'm selling a 10 rupees premium, okay, I will hedge it by buying a 4 rupees premium. Okay. I will hedge it by buying a 4 rupees premium. This I can do. So there are many ways with which you can do risk management. So this is the thing. Option selling is risky, but if we know how to manage our risk, then we can do very good in option selling because it has a higher probability of profit. So risk reward is not so good. 1:1, 1:0.6. 0.6. Okay, like that. But probability of profit is huge. And if you do it with proper risk management, then it will definitely help us. So in this strategy, I have discussed limit order. So what happens is in options, premium spike. See, premium is going down. Premium, stay here, the premium is at 100. Premium is going down 90, 80, 70, 60. Okay, what happens is some volatility comes, a sudden movement comes, and it spikes. It spikes. It goes to here. Like again, it reaches here, 100, and again immediately comes down. So the strategy idea of the strategy is that we'll try to catch it here. We'll try to catch it here. How can we do it? If we do it manually, if we sit in front of screen, we cannot do it. So the best way is put limit order at 100. What I will do is, why at 100? Because this is our resistance level. On options chart, I'm not talking about chart of index option, like Nifty option, sorry, Nifty or Bank Nifty futures. I'm not talking about that. I'm talking about the chart of Nifty options. Okay. So suppose this is 18,000 call. Suppose this is 18,000 call option of Nifty. It was at 100. I know I'm seeing the chart of this 18,000 call option chart. I am seeing that 100 is a resistance. What I will do is I will put sell order at 100, sell limit order at 100. If price goes to 100, it will be executed. Okay. One more thing I will do is, one thing can happen is price can go to 100 and it can keep on moving up. So what I will do is I will put stop loss order also. I will put 100 sell order, and I will also put say 120 buy order. That is my stop loss order. This is my stop loss. Okay. So even if price keeps on moving up and up and up, I will book my 20 rupees loss and I will exit. But if market makes a spike here, gives me an entry and immediately comes back, then I will make a good profit. So this is the basic idea of this. So see, every strategy has a basic idea on which it is developed. So this was my basic idea. I had seen it many times that option spikes, a sudden movement comes and option spikes, hits our stop loss and goes down quickly. So what I decided is, why not put a sell limit order at a resistance level and put a stop loss order of few points. So even if my stop loss is hit in the spike, I will just lose 20 points. But what if market gives me an entry and goes to 60 again in few minutes? It happens quickly. It spikes and suddenly it moves down. So I will In less time, I will make 40 points, 50 points, 60 points also. Okay, so this is the basic idea. And this I've discussed in brief. And in the video, this is the video, I have discussed everything in detail. So I hope you like the concept of this strategy. So moving on to the next one, which is our call debit spread positional. Call debit spread positional strategy. So see here on the left side, I am making this. The name of the strategy is on the left side of the screen. So call debit spread positional strategy. So earlier I discussed spread. It was intraday. Okay, this is positional. This is positional strategy. So what we do here is we will do call debit spread. Suppose when to implement, obvious, when our view is bullish. When our view is bullish, then only we'll do call debit spread. Okay, so suppose our view is bullish. So what we'll do is, suppose SBI is trading at 400. What I will do is, I will do call debit spread. Just I will go slight out of the money and 420 call I will buy. Okay, and again I will go slight out of the money and 440 call I will sell. So this is my main trade, because I think that SBI can move up, so I am buying this call. But why am I doing this? To reduce my risk. This is my insurance. If SBI moves down, then this will give me some profit. Suppose I buy this at 10 and suppose I sell this at 5 and SBI starts moving down. This will give me loss and this will give me some profit. I will be in loss overall, but this will protect me for some extent. Okay, so this is the basic thing, and mainly it works. You can do it in index also. You can do it in stock options also, because as I said, this is positional. This is positional. Okay, so this way we do it. The strike price selection I have explained, which strikes to select and which strike to select means for buying premium, and for selling which strike we should select. What is the relation between these two premiums? Okay, there is a relation actually between these two premiums. So what should be the relation? What should be the connection? And what if stock starts going up? What can we do? It is very good for us. When to exit, when to book profit. Okay, if stock starts moving down, what can we do? Should we hold it or should we exit? So everything I have discussed, and everything is rule based. Everything is fixed. Everything is fixed. Everything is rule based. So there is no discretion, no interference of monkey mind. Everything is systematic. And this is the main thing. When you are a newbie, when you are a beginner, it is very much important if you do rule-based trading. Okay, systematic trading, because that is the only way in the beginning to make profit from trading. Because if you go discretionary in the beginning, it's very much difficult, because I have experienced it. I have experienced many people doing it, that they face difficulties. So this is the thing, every detail. And I also discussed what is the capital required. What is the capital required if you do it in index? What is the capital required per lot in the stock options? Not that the capital required which shows in our broker. No, for proper position sizing for one lot. So suppose I tell you in index, suppose stock options if you are doing, suppose you are doing it in SBI. So for one lot, you should use minimum 4 lakhs capital. That way your position sizing will be proper. Because if you take a loss, your loss will be around 4,000 rupees. So if you use 4 lakh for one lot, your loss will be 1% in this trade. That's why your position sizing will be proper. I hope you are getting this. I hope you are understanding the importance of risk management, position sizing, and the overall structure and the overall strategies. So we'll move on to the next one, which is a put credit spread. Put credit spread. Okay. So as I said, again, we would use it when the view is bullish. We are doing put credit. So when to do it, what are the benefits, and where to implement it, whether to implement in index, whether to do in stock options. Okay. So everything I have explained, and what should be the stop loss, uh, whether to adjust or not. So mostly I try not to adjust, because adjustment, it goes on a different, it's a different game altogether. Okay. So this is the thing. Same thing, view is bullish. The previous one was call debit. This is put credit. So what are the entry rules, what are the exit rules? Suppose I will take the same example. SBI is trading at 400. What I will do is, suppose I want to do put credit. So I will go slight out of the money. I will sell 380 put, and I will buy 360 put. Okay, this is for hedge. This is my main position, and this is my hedge. This I will do. Suppose I sell this at 10, and suppose I buy this at 5. So this is the thing. This is the thing. If market moves up, it's very good for me. I will be in profit. If market moves down, so then we should know where to exit. Okay. So we should not allow this strike to become in the money. Before that, only we should exit. So we can put a stop loss of this at, this is our sell position. We can put a stop loss of say 20, 18 to 20 rupees. Stop loss is there. Then we will exit both. Okay. So this is about the put credit spread, and all the details, entry, exit, stop loss, target, uh, all the minute details I will explain in this video, and we'll move on to the next video, next strategy, which is our directional calendar, positional. So what we do here is, as we know, calendar strategy, we'll do it in index options. So directional calendar. Suppose my view is up. Nifty is at 18,000. What I will do is, I will sell put. Obviously, I will have to sell put. So say I sell 17,900. 17,900 put I sell in current expiry. I sell. Suppose I sell it at say 100. What I will do is, next expiry, what I will do, I will buy this almost the same premium. Suppose I suppose it is at trading almost similar premium of the next expiry put, we will buy. This is the diagonal calendar basic. Okay, so suppose we will not get it at 17,900. Suppose I get it at 17,700. Okay, this I will buy. This is the basic thing here. This is diagonal calendar, and we do it in positional. So we implement, suppose I implement it on Thursday, and for the next expiry I implemented, my view is up. So what I will do is, 17,900 put I sell, and almost similar premium I will buy in the next expiry. So this is diagonal calendar. So how to adjust, where to exit, if market goes in our direction, which is up, what we can do. If market goes against our direction, what we can do. So everything I've explained in this strategy video. So basically we are doing diagonal calendar on positional on index. Okay. So basically what is needed is, where to adjust if market goes against us, what we need to do. So everything is clear before entering the trade, so that we don't panic if market moves against us. We know what we have to do. So I hope this is clear. So now moving on to the next one. See, I've designed many strategies for you. If you're a newbie, you can try different things. Try the strategies which suit you, and this will definitely help you. Okay, so we'll go to the next one, which is ratio spread positional. Ratio spread positional. As we know, ratio spreads. Previously we saw credit spread, debit spread. Now we'll see ratio spread. Suppose I think that the market is moving down. Suppose SBI is at 400. Okay. No, we'll take an example of Nifty. Nifty is at 18,000. Suppose Nifty is at 18,000, and I have a view that Nifty can go down. Okay, bearish view. So what I will do is I will buy 18,100 call, one lot. Okay, 1x, and I will sell double quantity. Suppose double quantity I will sell. This I am buying and this I am selling. So this is a ratio 1:2. This is a ratio 1:2. So this ratio can be 2:3. It can be 3:4. It can be 2:5. So ratio can vary. It can be, yes, 2:2, but mainly it is 1:2 or 2:3. Okay, this way it can be, or it can be 3:4, 3:5. This can also be there, but mainly most of the time it will be 1:2 or 2:3. So this is there, and don't try to move it more than twice, because that will be very much risky then. So this is the ratio. So what will happen is, if Nifty goes down, and always try to take a overall credit. It's difficult, but at least no debit, no credit should be there. Okay, this way. So if you do it before 5 to 6 days of expiry, then you will get good premium, and then you can get net credit here also in this ratio. So this is the strategy, ratio spread positional. Suppose market moves down, then it is good for us, and suppose market moves up also, then also we don't have to panic, because we have this call option buy. Suppose the market goes to 18,050, suppose it comes to 18,100 also, then also we'll be in profit also only, because see, this is near, this will increase, and with time this will decrease, because this is slight further out of the money. Okay, so even if market moves down, it is good for us. Even if market moves up, it is good for us. Then what is not good for us? If market moves up suddenly, very sudden movement, then only it can hurt us. Okay, so the graph of this is like something like this. So suppose this is XY axis, something like this. I think, yes, something like this. If market moves down, it is also good for us. Suppose we take credit here, and in this range, if market moves down also, slight loss or no loss. If it is in range, we'll get good profit. And if it moves up suddenly, which has a very less probability, then only it can hurt us. Okay, so this is it, and all the details, minute details, all the details I've explained in this strategy video. And we'll see our next strategy. Only one is left, so 13 we have covered, and this strategy is ratio ladder. So now we discussed ratio, spread. Now we'll discuss ratio ladder, almost similar to ratio spread. I will take the same example. Nifty is at 18,000. I have a bearish view. I think that market can go down. So what will I do is 18,100 call, I will buy one lot. 18,200 call, I will sell one lot, and 18,300 call, I will sell one lot. Okay. So what is the difference between this and the previous strategy? Here in the previous one, here we were selling two lots. But now what I'm doing is, instead of selling two lots on this strike, I'm selling one lot at this strike and one lot at this strike. This way, I'm further reducing my risk. Further reducing my risk. Okay, even if market comes up till here, I have no panic. Okay, till 18,200, I have no panic. After that, I will have to see what I can do. Okay, so even if market moves down, no worry, small loss. Even if market moves up, very good. So I think this is the best strategy which we can use for positional. For positional, this is the best ratio spread or ratio ladder. Okay, so because we don't panic and we have a lot of time for adjustment. So exact details, where to enter, where to exit, if what we can do if market moves down, what we can do when market moves in our direction. All things I've discussed in this video, strategy video. Okay, so this is the ratio ladder strategy. This is much less riskier than ratio spread. So it works very good on stock options. Also, it works on index options also. So these are the 14 strategies which I have discussed in this video course in detail. And this video is also, I think, long, more than 30 minutes now. So you can only think, for discussing all these 14 strategies, how much knowledge you can get, how much it can benefit you. Because in this video only, you have got what knowledge you can get. If you can get this much knowledge in this 30-minute video, just think what type of knowledge you will get if you invest in this strategy video course and you see the videos of all the strategies. Okay, so this is the power of investing in a mentor, in a guide who is doing it. I'm not an analyst, I'm a trader myself. I trade the strategies which are profitable. I trade my strategies, and I make losses, I make profits, but overall I make profit. So you should always learn from a person who is a real trader, not an analyst, not a chartist. Okay, so learn from a real trader, learn from me, invest in the strategy video course, and choose the strategy which suits you. And one more thing, that no strategy will work if you do these two things. If we do if we do system hopping, if you change your system, if you see losses for 2 to 3 days, and if you don't follow the rules. But if you follow the rules and if you stay with the strategy for minimum 3 months, you will definitely see the profit of the strategy. Strategies work, systems work, people fail. Okay, so always follow the rules of the system. And even if you are in a drawdown, even if your system gives you losses for 2 days, 3 days, 4 days, 5 days, still be with the system. Follow the rules, be with the system for minimum 3 months, and the system will definitely give you profit. Okay, so all the 14 video courses are here. The value of each video course, I will just clear this now. The value, 14 video courses are there, strategies, 14 strategies videos are there, and each each strategy has a value of 1,000 rupees. So for 14 strategies, the value is 14,000 rupees. Simple calculation. Okay, but you will not have to pay 14,000 rupees for this. I will give you all of this at a very special price, because also know that there are many other people which are charging more, 20,000 rupees, for 50,000 rupees, 60,000 rupees, and they're just telling how to sell a straddle. But I'm not like that. If you invest here, I will give you at a very low price so that you can also afford it. You can also see what is inside it. You can also see that what is possible. Okay, so I will give you at a price of just rupees 3,999. 3,999 rupees, you will get all these 14 video courses, 14 strategies sessions, and you can choose which strategy suits you. or you can use more than one strategies also. It's definitely, it's very good. So you can do this, and you can invest in your learning. And along with this, if you invest 3,999 rupees in this strategy video course, along with this, what you'll be getting is every Wednesday 9 p.m. I will be there live for you. I will be there to solve your queries, to solve your doubts, and to solve your problems which you are facing in your trading. So I'm there to help you. I'm there to guide you for a lifetime, and this is for lifetime. This is not for 1 month or 2 weeks or few months. No, this is for lifetime. I'll be there to guide you every Wednesday 9 p.m. I will be there to solve your queries, to solve your doubts, to solve your problems which are facing in your trading. So this is the bonus from my side, lifetime support from my side. Just not like any other trainers, they train for just 2 days and then you cannot even contact them, even if you have your doubts. No, even if you have your doubts, I will be there for you always to support you, so that you start making money from trading. Okay, so I would suggest you, advise you to make this investment, because you make a loss more than this every now and then. So if you invest in your learning, if you invest this amount in your learning, excuse me, you will definitely get more returns. It will definitely help you. It will definitely benefit you. So I advise you, I suggest you to invest your one loss. This is your one loss. If you make a loss, you make a loss of this. Okay. I advise you, I suggest you to make your investment of this much amount in your learning, and you will definitely cover this within 10 days. 10 to 30 days, you will cover this amount, and you will get the knowledge, and you learn the skill. And this strategies, you keep using them and start and keep earning money from share market. Okay, I will just clear this, and I will go to the other screen and stop this. Okay, I will share other screen now, this one. So this is the link below this video. I've shared the link from where you can purchase. Okay, as you can see here, 14 profitable trading strategies, rupees 3,999. And what you will be getting here, description, you can read the description what you will be getting. 14 strategies: intraday bank nifty, expiry strategy, morning strategy, bank nifty, straddle plus strangle, directional spread, straddle positional, green vortex red. So the name of all the strategies I have discussed here, I have written here. You can go through them, and any doubts if you have, you can WhatsApp me on this number. The number is here. I'll just share it again. As you can see here, this 7666479 384. This is my WhatsApp number. If you have any doubts relating to this purchase, you can contact me. If you have any doubts related to trading also, you can contact me here. Just rupees 3,999. Invest in your learning, and that will give you return. That will give you good return. Okay, so 14 profitable strategies at rupees 3,999. This is the offer. This is the deal for the day. Just grab it and invest in your learning. The link for the purchase is below the video. In the description of this video, there is a link. Just click on it and make the purchase, and I will see you. I want you all to become profitable in trading. Okay, see you as a profitable trader and invest in your learning. With this, I end this session, and thank you all.